You know how it is. One minute, Bitcoin's just cruising along, everything seems fine, and then, bam, the floor completely drops out. It was this sudden, pretty brutal price crash that left everyone asking the same thing. What on earth just happened? So let's dive in and figure this out together. And we are not talking about a little dip here. In just a few hours, Bitcoin plunged by $4,000. It was fast, it was sharp, and honestly, it caught a whole lot of people completely off guard. So yeah, what just happened? Was this just another random, wild day in the crypto world, or were there much bigger forces at play here? In this explainer, we're going to put on our detective hats and investigate the real reasons behind this absolutely dramatic drop. Okay, so our investigation is going to start with our first major suspect, a global shockwave. We're talking about these powerful economic and political forces that actually started way outside of crypto but sent massive ripples right through it. It looks like the trigger, the initial spark, was this. On January 18th, President Trump suddenly announces new tariffs on European goods. Now, this was apparently over some dispute about Greenland, of all things, and it was set to kick in on February 1st. Well, that announcement instantly spooked global markets, creating what everyone in finance calls a risk-off environment. So what does a risk-off mood actually look like? Well, when uncertainty suddenly spikes like that, investors do what they always do. They run for cover. They flee from assets they see as risky, like you guessed it, Bitcoin and stocks. And they pile into traditional safe havens like gold and the US dollar. You see this perfect inverse relationship play out. But hold on, it wasn't just the trade war fears. At the exact same time, some really strong US economic data was coming out, good numbers on jobs and inflation. Now, you'd think that's a good thing, right? But here's the twist. It meant the Federal Reserve was now way less likely to cut interest rates in March. That, in turn, made the US dollar even stronger, which, as a general rule, puts downward pressure on Bitcoin. Okay, so the big global picture definitely set the stage. But to really understand why a simple dip turned into an absolute nosedive, we have to look inside the crypto market itself. And that brings us to what I'm calling the crypto domino effect. Now, to get this domino effect, we've got to quickly understand two super important terms. First, leverage. It's basically trading with borrowed money so you can make much bigger bets. Great if you win, but devastating if you lose. And that brings us to liquidation. That's what happens when your leveraged bet goes wrong and the exchange automatically closes your position to stop you from losing even more money. It's a forced sale. So here's how these two things create an absolute cascade of selling. First, the price dips below a really key psychological level. In this case, let's say it was around $93,500. Well, that single move instantly triggers liquidations for all the traders who used leverage to bet the price would go up. This creates a huge wave of forced selling, which pushes the price down even faster, which then triggers even more liquidations. You see, it's a vicious downward spiral. And the scale of this cascade, it was just staggering. In the span of only 1 or 2 hours, leveraged bets worth $680 million were just gone, wiped out. That right there is the destructive power of a liquidation cascade in action. And the pain? Oh, it was not limited to Bitcoin. Not at all. Other major cryptocurrencies like Ethereum and Solana, they actually got hit even harder, dropping somewhere between 4 and 6%. All told, the crypto market lost a whopping $130 billion in value in just 12 hours. Just gone. So we've got the external shock and the internal domino effect. But there were other things going on. A whole rogues gallery of accomplices, you could say, that created the perfect conditions for this crash. This really was a perfect storm of factors. Yeah, a few other things absolutely helped fuel the fire. For one, the drop happened during a US holiday, Martin Luther King Jr. Day. That means trading volume was really low or thin, making prices way easier to push around. On top of that, you had some big whale investors who started selling, including one wallet that hadn't moved a cent since 2014. Then there were big outflows from a major Bitcoin ETF, and just this general cloud of regulatory anxiety hanging over everything. Each one of these was another log on the fire. And the result of all this hitting at once? A complete and total shift in market psychology. You could see it on the Fear and Greed Index. Sentiment just flipped on a dime to extreme fear. All that optimism that had been building for months, it just evaporated into widespread panic. which, of course, led to even more selling.
Okay. Whew. So we've identified the culprits, right? We had the global shock, the liquidation cascade, and that perfect storm of other factors. So the billion-dollar question now is, what happens next?
Looking ahead, it seems like there are two pretty clear paths. You've got the bull case, geopolitical tensions cool down, the liquidations are finally over, and the market starts to rebound back toward that keen $94,000 level. Then you have the bear case. The trade war gets worse, more selling pressure comes in, and Bitcoin could fall even further to test support down around 90,000. So after all that, what are the big lessons here? What should you really take away from this? First, this was a classic crypto pullback. It was amplified by leverage for sure, but it wasn't some kind of permanent collapse. Second, it's a huge, flashing red light reminder of just how dangerous high leverage can be. Third, it shows you absolutely cannot ignore what's happening in the global economy. And finally, the golden rule, as always, do your own research. And that leaves us with one final and I think crucial question to chew on. Was this whole thing just another temporary, wild ride in the crypto markets? Business as usual? Or was it an early warning sign, a kind of canary in the coal mine for growing instability in the entire global economy? Definitely something to think about. Thanks for tuning in.